So let's talk a minute about small business loans. You're in this room because you're wanting to grow something valuable, your business. Anything that grows requires fuel. Business fuel is time, business fuel is labor, and business fuel is capital. There are many sources of capital for a business. There are grants, there's debt, there's equity. This whole day today is all about that one source of fuel for a company, financing, capital. I'm going to talk specifically about one of the most powerful yet misunderstood sources of fuel for your business, for any business, and that's an SBA loan. So let's compare an SBA loan to a conventional regular bank loan. You need $1 million for your company. You'll go for a conventional loan and you'll put 20% down, $200,000, and you'll want to borrow $800,000. Well, the bank's on the hook for $800,000 should you default. So they're going to vet you to make sure you're good for $800,000. Do you have a background such that you know what you're doing with $800,000 of dollars of their money? Do you have any bankruptcies in your background? Do you have a decent credit score? And do you have collateral? Enough collateral to equal the value of the loan, $800,000 worth of collateral. But oh no, typically a bank wants a loan to value of about 0.8. Oh, Joel, now you're talking math. We don't do math here. I'll make it easy for you. You want to borrow $800,000. The bank will look for collateral of $800,000. Loan to value is you divide the loan by the value of the collateral. 800,000 loan divided by $800,000 collateral equals 1. But yet most lenders want a 0.8. $800,000 loan divided by $1 million collateral is 0.8. There you go. For a new business starting out, existing business, coming up with $1 million of collateral can be frankly impossible. You probably all know that if you've gone for conventional working capital loans, which is why we kind of go, we just throw our hands up on bank loans and move on to other sources. Enter the Small Business Administration, which levels the playing field. Contrary to popular belief, the SBA does not lend money. The SBA guarantees your loan to the lender, making you more attractive. This is how that works. You still need that $1 million. We'll go with the 20% down. You're still needing $800,000 to be borrowed. The SBA will come in and say, we'll guarantee you for up to 75% of your loan. And I see usually going out at the max. So $750,000 is guaranteed to the lender should you default. So the lender goes, got $200,000 from you already. The feds will guarantee that I'll get $750,000 back should you default. That takes us up to $950,000. I'm only on the hook if you default for $50,000. All of a sudden, you're a lot more attractive to a lender. All you need for collateral is the collateral to match that $50,000 hook. SBA lending makes loans much easier to get and much more available to good business people. But it doesn't stop there. For $19.95, you too can have SBA loans typically have more favorable interest rates than conventional loans. SBA loans or backed loans typically have better terms. A conventional working capital loan is probably 5 to 7 years. An SBA guaranteed working capital loan has to be paid back typically in 7 to 10 years. Because of the longer length of time, it lowers your monthly payment, more cash in your pocket to run your business. Yes, over time, you'll pay more in interest. Yet, and especially in the beginning era of your business, cash is what's at a premium. You'll take the cash with less payments, and all SBA loans can be refinanced and paid off without penalty, usually after a couple of years. So for many, many reasons, an SBA-backed loan can be attractive to a business in any phase of its business. What can we use SBA loans for, you ask? I'll tell you. They can be used for working capital, buying inventory and equipment, buying real estate, refinancing high-interest debt, buying another business. And the SBA loves it when you buy out investors and buy out partners, because you're consolidating ownership into one person, or one head on the block, I like to say. And the SBA does that. There are different types of SBA loans, which we're not going to go into now. The important point, I guess, here is if financing has been a barrier to you, let's talk. If you've been told no by a bank before, let's talk. And if you're ready to take this next journey, knowing that all sources of money have pros and cons, others can speak to their pros and cons. You know, the pro of a loan of debt is you don't give away ownership of your company. You own it all. What's the con? You got to make that payment back every month. But if you've got sales and you can cash flow it, and that's where my job is, to help you kind of figure out that, to make this work, it could very well be that SBA loan is just the source you need to take your business to the next level.